everyone, this is Ryan Mallory for SharePunter.com. Today is July 16th, 2015. Doing another SharePunter hangout with you guys, go over the markets. What are we at right now? Are we at the end of a dead cat bounce, or are we at the start of a massive expansion in price? Are we ready to break out to new all-time highs and then be off to the races for the rest of the year? Or are we going to find ourselves where the market was at again just a couple weeks ago? That's really the big question that's plaguing traders. Today and yesterday we've had a really good run up here. You can see we were below 2050 just last week. Last Tuesday we were hitting lows of 2044 on the S&P. Today we're hitting rally highs of 2122, 2123, and it may not be over. So you can see here just on these charts that I've drawn that the market has come across some pretty interesting resistance levels. The key here is just draw these lines as precise as possible. You can see right here, this is a short-term resistance level that's very key. I came into today talking about 2120 as being a issue for the markets going back this entire year. You could see across this level here, this 2120 price point has been a lot of resistance. So holding on to or breaking through that was essential for the bulls today. They've done that so far by staying about 2 points higher. Then you have this resistance level that I just scantily mentioned, coming off of the highs from May. Hasn't quite tested it yet. Very well could by the end of the day. And then you have this head and shoulders pattern. When I back out a little bit, you can see it. This is a left shoulder here. Then you have the right shoulder. And then you have, this is the head that I just drew right here. And then you have the right shoulder. Then you have the neckline. It's already broken through the neckline and then recaptured that support level. So if the S&P 500 breaks above this right shoulder, it nullifies the whole pattern. That's like 2129 or so, and let's just say 2130, just for rounding purposes. So if it hits 2130, head and shoulders pattern nullified. It's no longer important to us trading this market. And then of course you have some resistance overhead. I don't think this is really an issue right now, but rising resistance, you could say at the current rate it's at 2045, not going to be challenged anytime in the next day or so. So I wouldn't even worry about right now that being an issue. Really a big thing is this resistance level short term here. Secondly, breaking through above the right shoulder, and then third, establishing new all-time highs. So we haven't established new all-time highs since May. Since May, we've traded below the 200-day moving average. Didn't take place for very long. We quickly got back above it, and that's really the current state. What does also have me a bit concerned is the VIX. For anybody that's been following the VIX this year, you'll know that it's right at that place, going back to a year ago in July, where it just formed this very, very nice support level, and a huge issue for the markets being able to break below the support level. It cannot get below it at all. And you look at today, we are right at, and we have bounced just a smidgen off of it. Nothing to get too excited about. But what does that mean for tomorrow? Well, I'll get very concerned if we start seeing some selling creep back in the market and we see a sharp reversal in the VIX as a result. VIX has just been falling to pieces the last 5 days. So, it touching, 12 right now. There's a real chance for this dead cat bounce to fail right here, especially if it didn't break any of those price barriers before then that I already mentioned in the previous chart. This 12 barrier is very, very significant. Every reversal that we've seen this year has been a result of the VIX hitting this price level at some point. So and they're sharp reversal. So be very cognizant of that. A couple of the stocks that I'm watching, right now, what I'll do now is I will get into my current positions, which is only two. I'm in Facebook. It's rallying nicely today, up about 0.9%, pretty much, trading lockstep with the market. It's got a nice rising support with the 5-day moving average. I was in UPRO yesterday, sold that for about a 6% gain. Yeah, it would have been great to have held it for another day. But you got to remember with UPRO, when you're in a stock like that where you have a 3X ETF, it's easy to lose 6% in a day. I mean, market drops 4%. I'm trading in the red. I go from 6% to trading in the red. So I pay very close attention to this 30-minute chart on UPO when I'm trading it. You could see it was starting to look a little distributive, and I got shaken out, right there when we had that break yesterday. That's okay by me. I would have liked to have stayed in it still, but I have to make sure at all costs that I'm protecting profits. And UPRO started getting a little bit shaky yesterday when you start having the riots against the police in Greece and everything else. So I just decided to go ahead and cut that position loose and move on to the next trade. But Facebook, I'm currently in. I mean, I don't see any reason to sell it right now. More than likely, we'll be holding this another night. My new addition today hasn't been too hot. TRIP, it's really struggled out of the gates. You look here, you have a very long-term breakout. It got right back, it got right above it today, and it's been giving up some of those gains since then. Could be cut by the end of the day. I'm not sure. It's really just going to come down to price action and how it's trading in terms of whether or not it stays for another day. So I got those two positions on right now. 80% cash, 20% long. I put 10% on each position. Then you take the S&P 500. We talked about the resistance levels there. Then you take the VIX. You've got some key support right now. It's actually trading below 12. You got key support being tested here. It's a known reversal play for this market. You don't want to hold through another reversal. So where does that leave us traders? Okay, I'm bullish right now because the market's bullish right now. I'm willing to get bearish as soon as the market wants to get bearish. So I'm not bullish because I want to be bullish. I'm bullish because the market says be bullish right now. It goes from 2044 to 2122. Why would you be bearish about that? Okay, be bullish while the market's bullish. Be bearish while the market's bearish. That's pretty much what trading comes down to. And so the VIX, while the market's still trading very bullish right now, the VIX is at a place where the market could get bearish any day now. You get a sharp reversal, that VIX is going to pop really hard. It's probably going to pop back into the 13s, maybe in the 14s, and it's going to bring down the market with it. So what do I look at playing here? First one is SPXU. Okay, I have two longs. I can add SPXU as a 3X ETF. It's almost like buying a 30% position of your portfolio. It really is. It's like buying a 30% position to SPY as a short. I shouldn't say buying. It's like shorting 30% of your portfolio on the SPY. But I'm only having to use 10% of my capital here. So I'm really hedging myself and having this somewhat biased. I probably wouldn't say a bias to the short side because Facebook and Trip tend to have high betas to it. So, but I would say it pretty much makes me flat with the, my terms of bias towards this market by shorting, or in this case, buying SPXU. SPXU will give me the inverse of the S&P 500, 3 times the amount. So if the S&P is down 1%, SPXU is up 3%. So this is a position that I'm looking at right here. And the other one is SDS. Both of them, at our lows here. I'm probably leaning, just since I have two long positions. I feel like it's a little bit easier to take on a 3X ETF in that case. There's some gaps that needs to be filled. Once again, I'm not a front run the market here. Okay, if the market starts showing some weakness as we head into the last 45 minutes of trading, then I will at SPXU. As it stands right now, we're not getting that out of the market. So only get bearish on this market when the market's ready to get bearish. Don't jump in front of it. Assuming that we break through some of these resistance levels, okay, I want to give you guys some trade ideas to play with as well. ATVI, nice little breakout here. You can take draw a breakout level. Didn't work for me here. Let's see here. I learned a little trick in with TC2000 that if you draw a line across, just click and drag a line across, and you hit the space bar, it'll turn into a yellow line for you. So that's pretty cool. In any case, you have a little bit of a breakout right there. So if it gets back above, say it's 2608 level, could be worth getting long. The only thing that makes me a little bit concerned is it's already had a pretty run up from the low 24s up to almost 26. So that's something to be concerned about. But nonetheless, it's a price resistance level to follow here. FINL finished the line. Nice bull flag here, man. I almost got into this stock a few days ago, and it worried me how bad of a reversal this thing had at the end of the day here. So I never got into it. I think it was Monday that I was looking at this one, and I was looking at it at like 2809, and then all of a sudden it pulled back into the close, and then on Tuesday it really gave back some. So a little bit hesitant about it, but I mean, there's no mistaking there's a massive bull flag here. But what seems to be the problem with this stock is this resistance level overhead that's causing some problems for it. But once again, beautiful bull flag pattern there. HD's been going back all day. I mean, this was one that I was thinking about today as it was come back to this breakout level. It didn't hold the breakout level, so right now I would say stay away from it until tomorrow. If tomorrow it wants to try the breakout action again, then maybe that's worth trying to get in at that point. I wouldn't trade anything. I'd probably put my stop below the Friday lows. You basically trade it with like a 2.7%, 2.5% stop loss by putting it, below 112. And then you have LUK, one of the quirkiest stocks to trade out there. Just trades according to its with not much consideration for the broader markets, but nonetheless, I mean, you got some price action there that suggests the breakout is imminent, on this stock. If it can get back above the 2505, 2506 level, get long there. MDLZ, another brilliant looking chart pattern here, breaking out to new highs. Very tight stop loss that is you wouldn't have to use them to the stop or that wide of a stop loss at all. It's very tight, but it breaks beautifully above current resistance levels. Then you got PSX oil, once again similar to MDLZ, breaking out above that. SEE. This is real resistance on SEE at 5250. It's broken out of that level. It's held it, but it's not really done much since then. Not doing much today either. So really, you want to see some kind of pickup in that stock there. If the market can break above and out to new all-time highs, it gives us reason to maybe start adding like 5, 6, 7, even 8 positions into the portfolio. Not really had that chance to do that all year long. But with a market that can trend a little bit higher and break through some resistance levels that have been stubborn for us all year long, it happens. A lot more positions and a lot more opportunity can be seized in this market. And then you got TIF, Tiffany. Once again, 94.50 seems to be the magic number on this stock. It's out of that. You could probably trade it with a stop below 92.50. Long term, it's come out of this base. It's still has a huge gap to fill. So a move back up to 101 or so doesn't seem too far out of reach for it. So, well, that's going to do it for today. If you have any questions, feel free to hit me at SharePlanner, Ryan@SharePlanner.com. If you'd like to become a member of the SharePlanner Splash Zone, go to SharePlanner.com/Splash Zone. So I'm in there every day. I'm answering questions, giving my thoughts, analysis, trade alerts, not only in the chat room, but also to your phone and to your email. So, you're always, whether you're on the go or whether you're at your house and able to follow me in the chat room, either way, you're going to be getting my alerts. And, I trade with everybody. I from the beginning of the trade to the very end of the trade, I'm posting updates. I'm increasing the stop losses when I get in, when I get out. And I post my performance too, which you can find on shareplanner.com under Splash Zone. One of the few websites out there that actually does that. Take a lot of pride in it, because when you sign up, you know exactly what you're getting, you know exactly how I'm doing, and you can see years of past performance and just how well I've managed to navigate through all of the ins and outs that the market has given us throughout the years. So definitely try me out. 7-day free trial, and if you don't like it, you can cancel it. If you do like it, love for you to stay on. So you all have a great day, great evening, and one more day before the weekend, and enjoy that as well. Thank you, and God bless.